So hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Over the next 30 minutes, we'll be talking about all the cues for trade, given the fact that, of course, we have positive cues this morning, after the kind of sell-off we saw on the Wall Street yesterday. The cues globally have also turned positive, with Wall Street clocking in strong gains yesterday, and Asian markets also off to a strong start. So we'll be talking about all the cues for trade, all the stocks that will be in focus in today's session, and of course all your stock related queries will be taken up with our technical expert on the show. So if you have any queries, as usual, send them in to us on our YouTube feed and we will have them addressed. But of course, before we move any further, let's take a look at the top headlines at this hour. Wall Street looks past concerns over the escalation in the Israel-Hamas war as some Fed members express caution over future rate hikes. In fact, US futures are also trending higher after overnight gains. Asian markets are off to a strong start, with the Nikkei surging nearly 2%. The GIFT Nifty is also indicating a start above that 19,600 mark for us. Oil prices rally another 4%, with Brent crude hitting $88 a barrel. Safe haven buying pushes gold to a one-week high. Israel begins a blanket blockade of Gaza, cutting off essential supplies including food, fuel and medicine. Tel Aviv's forces continue to pound the strip amid skirmishes on Israel's northern border with Lebanon. Meanwhile, Hamas has indicated that it is open to discussions over a possible truce with Israel. And among stocks in the spotlight today, we focus in on stocks like Tata Steel as Fitch upgrades its rating. Dr Reddy's, as it is, also will be in focus as it is suffering from a legal setback in the US. Well, let me first bring on board our technical expert for today. Joining me is Sacchitanand Uttekar of Tradebulls Securities. Now, good morning, Sacchitanand. Till now we have shown resilience around that 19,500 mark. In fact, last week, there was some bit of strength coming in. But yesterday, of course, with what happened over the weekend, we did get spooked by, the volatility in crude prices and, about how the geopolitical situation will pan out going forward. But 19,500, that's one mark we have been able to hold on to. So, in light of that and, of course, positive cues coming in this morning, would you expect the Nifty to hold above that 19,600 level today? And, on the Bank Nifty, we have broken below a crucial support zone of 44,000, on the chart. So, where do you expect that to be heading today?
Good morning, Nandita. I think yesterday we saw, Nifty reacting in a very mature way. In fact, the gap support at 19,500 has been very significant. And this is exactly where we saw a good, healthy consolidation in yesterday's session. If you look at the formation, it looks like a, spinning top formation, which is basically, a sign of indecisiveness. But yesterday, we saw that it managed to hold on to that support at around 19,500 well. We did not see any further incremental weakness during the day, despite the fact that the volatility had jumped up by almost 10%. If you look at the overall structure, I think that structurally we are convinced that 19,300, where we saw the recent swing and the development of a dragonfly doji, probably that particular level may not be revisited, and we may see Nifty again scaling towards 19,840, during this particular week itself. So the structure remains healthy. We are, seeing signs of consolidation here, but we don't see any major weakness going forward. Though Nifty has been trending below its 20-day exponential moving average, which is placed at around 19,640 about. So that's why I think today's closing would be very crucial. In case if we see Nifty, trending above that 19,630, 640 mark, then probably, the trajectory towards 19,840 would be clear. Now, this is a major resistance for the week, and we don't see this particular resistance getting crossed during this particular week itself. So right now, I think it's a good buy on decline, kind of a scenario, wherein we don't see Nifty, slipping below the 19,440 mark on a closing basis, and that's why we continue to recommend building long positions here when it comes to Nifty. But when it comes to Bank Nifty, the data is relatively weak. In fact, it has been failing to sustain above its 20-week exponential moving average, which is 44,400. And even in the last few trading sessions, we have seen the critical mark of 44,000 getting breached. So here, I think probably we may see further slippages. 43,600 is one particular level that we are watching out for. But on the immediate basis, we may see today's action remaining confined within 44,200 on the higher side to 43,600 on the lower side. So one can look at creating some long positions when it comes to Nifty, but Bank Nifty it is still sell on rise kind of candidate.
All right, setup on the Bank Nifty, of course, is a sell on rise. But let's talk about the stock of the day then, Sacchitanand. Dr. Reddy's, yesterday it was the top gainer in a weak market, among the top gainers in a weak market. This morning there's some negative news flow around the stock. Of course, the company has been named as a defendant in a complaint filed, in early October last week or so in a US court. And it has been named along with several other drug makers, who have approval for the cancer drug Revlimid. The complaint has been filed by Mayo Clinic and LifePoint Corporate Services. Basically, it alleges that the company has maintained a shared monopoly in the generic Revlimid, and it has also improperly limited generic competition through 2026. What kind of a impact do you think this negative news flow could have? Because if you look at the stock over the last 1 month or so, it has fizzled out a bit, although on a 6-month basis it has done fairly well. So it is quite a bit away from its 52-week highs as we speak. So 5,500 possible on charts anytime soon, or do you think it will retest levels of 5,400?
Well, if you look at Dr. Reddy, it has been in a corrective mode. This corrective mode has still not been concluded. Yesterday, we saw a very strong price action if you compare it with its previous 3 bars. But if you look at the RSI and the placement of the ADX, the comfort is still not so strong. On the higher side, we need a decisive close above 55.80, and probably post that we may see a very good rebound, getting confirmed on this particular price chart. But as of now, I think the low top low bottom sequence continues. The immediate support at 54.20 is very crucial in case if we see this particular level getting breached in the early part of the trade, then probably we may see further escalation towards 52.40, 52.60 kind of a zone. So I think when we look at the ongoing trend, is still bearish. One can continue holding on to their short position with a stop loss at 55.80 and review in case the stock reaches that next support zone around 52.60.
All right, hold that thought, Sacchitanand. We'll come back and talk about specific stocks and take up queries as well. But let me also welcome on the show, Sandeep Raina, who's the Executive Vice President Research at Nuvama Professional Clients Group. Good morning, Sandeep. Great to have you on the show. Well, I want to first ask you, how should one navigate the kind of volatility that has been stoked by the geopolitical concerns across, the Middle East? Of course, there are concerns that if it spills over to, other Middle Eastern nations like Iran, it could have, serious repercussions. But for now, we've seen global markets stage a good comeback. How should one navigate this short-term volatility in the market now?
See, if we talk about markets, these are just action that leads to small corrections. Now, it's not because we've been saying from last now 15 days that we should be a little cautious. So when I say cautious, I'm not worried. So we should create cash, and cash to the tune of 20% only in mid caps. Okay. So we have to behave right now very different for large caps and very different for small caps and mid cap, because large caps have not done so well in last 6-8 months. They have done reasonably well vis-a-vis if I compare to mid cap. But mid caps, there are so many of them which are doubled or tripled in last 6 months. So we have to be a little cautious on those companies, those stocks which have gone tripled. And they have tripled because of a reason, not just by that, because their numbers are coming in, their PE has increased. So I'm saying that portion of market, I think we should be a little cautious with. While on the Nifty stocks, which are large cap, I'm not too worried. There can be 5-10% correction. Now you talk to Nifty parlance. I don't know can there be 18,500? I'm not too worried as a fundamental analyst because 5-6-7% correction is not a big correction for us. So, but given the state of the market right now, more than what has happened in Israel and Hamas, I think we should be more worried on the global side, on the financial side, which is what is happening in US, what is happening in China. India is doing great. So that way, I will be a little cautious in the market, but I'm not worried. So in simple tense, if I just tell you in simple one sentence.
Right. Of course, caution warranted in the mid-cap end of the market. But let's talk about the mid-cap PSU banks. I think they have become prone to quite a bit of correction. Some of these banks like Indian Bank and, Bank of Maharashtra, they were among the top laggards yesterday, 5%, 6% kind of cuts coming in. They've already had a very good run. Do you think valuation-wise, this correction is warranted now and that perhaps, investors can look at some of these names on correction?
See, I think the larger PSUs, they are the reasonable one like SPI and Nuvama. Indian Bank is also reasonable. But the other one that you're talking about, actually, they are closer to now 2 book, 1.8 time book. I mean, I'm getting a private bank at 2 times book or something, or maybe 1.8 times. So I will look for private bank rather than these smaller PSUs. So I won't be very keen on these small PSUs, frankly, right now.
All right. Of course, private banks is where, the value is at the juncture. But let's also talk about in Adani Ports. Of course, it has the Haifa port in Israel. And because of that, I think there was a little bit of caution yesterday. We saw the stock plummet somewhere around 6% or thereabouts. Today, this morning, we have a brokerage report on Adani Ports from CLSA, wherein they have a buy rating target price of 878 rupees per share. It says that the Haifa port accounted for just about 3% of the H1 volumes for the company, and war fears in fact actually present a good buying opportunity when it comes to the Adani port. When it comes to Adani ports, what are your own thoughts? Do you think this is a good opportunity to now buy into this name? Because a lot of market experts have said that said positive or have given their positive views when it comes to this particular stock, Adani ports.
See, I don't cover this stock, but I'll tell you, it's a new port for them and the volumes won't be very big. As you said, 3-4%. Yes, it is very small. Now, these geopolitical things can impact them for 5-6 months, but that's about it. When you buy a company, you buy for a really long time. And as a promoter also, you look for a property or for a product or for any asset for a very, very long time. So I don't think so this will impact Adani Port's number to a very, very large extent. As the valuations come to more from the Indian port and the volume that they will do in India. So yes, and it's a reasonably good company given the cash flow they make. So yes, we can basically buy that. But having said that, what I just want to tell you guys is, right now the more interesting part is Indian company. So look at what is happening in power. The entire power segment from, the products to actual power, the renewables, those are looking very interesting. The capital goods is looking very interesting in India. So I'm saying look for companies which are domestic in nature, where the revenue comes from domestic, because domestic market is doing very well. And there's a lot of scope in defense also. So whatever is manufacturing, because India lacked that, right? Now, if you see right now, the focus is towards that. So look for companies in that space rather than getting into other spaces. That's my view, and that's what we are telling our clients.
All right, that's the view on ports and of course, the power sector as a whole. But let's talk about, BSE. Now, this stock has been on a tear. It has already revised its buyback price and, current buyback price of 1,080, it is somewhere around 30% above that. And of course, we've heard that, it has got lukewarm response for its buyback as well. What factors do you think will continue to or will drive the stock's performance here on, given the fact that it has seen such a lukewarm response? What happens to capital allocation, dividend distribution, and how will the stock react to the kind of lukewarm response that it has garnered? Do you think much of the rally is the leg of the rally is over now, and perhaps it could look at some correction from here on?
So for BSE, I think what they're trying to do is they're getting into F&O and they're trying big time that side. And we know the big daddy NSE is actually the volume leader that side. So they are trying everything possible. And I don't think so. Maybe there can be some small correction. That's about it. But if you see for the long run, I think BSE is reasonably good stock to hold because India will grow, Indian markets will grow, the trading in India will grow. So that is a stock that you should have in your portfolio for a long term. But the small correction is okay because the stock has rallied off late if you see in last 3 months. So that's okay.
All right, and lastly, I want to get in your thoughts on Hero Moto. Of course, there's been run-in with the authorities. In August, we saw, a run-in with the ED, and yesterday, of course, there was news flow that the Delhi police has filed an FIR against the company and its promoters. So, every time this happened, the stock has given a, reaction or thereabouts. Do you think these are just short-term moves and, the fundamentals of the company remains intact and perhaps it is, one stock in the two-wheeler space that warrants a look?
See, the issue with these kind of news flows is that the stock never performs. And what happens is whenever the stock performs, it will come down again. So for an investor, if it doesn't matter because if he's playing for long, let's say for 2-3 years, it has no issues. But for a trader, it becomes a very difficult stock to trade because every time you'll see a correction of 4-5%, the trading losses becomes high. So for an investor, it doesn't matter because these things will keep on coming, they will get rectified and business will run as usual. So for a long term, I don't think so there's an issue with this and maybe it can be accumulated. But the horizon has to be bigger, like maybe 1 or 2 years.
All right, keep a longish horizon when it comes to stocks like Hero Moto. With that, Sandeep, it was a pleasure chatting with you. Thanks a lot for taking out time and joining in this morning.
Thank you.
Well, with that, let me go back to Sacchitanand and take up some viewer queries. Quite a few trickling in this morning. Sacchitanand, I want to start with a query on Oil India. Of course, this stock has hit a 8-year high, against the backdrop of rising crude prices. This morning, we have a query coming in from Ritik Chauhan. Wants to know your thoughts on how or where to, where the stock is headed and how to play it at the current juncture, given the fact that it has rallied so much. Time to book profits?
Well, the trend is very strong. We have seen very strong momentum in last couple of weeks' time, and even right now, I think it is better to keep trailing your stop losses higher. So the immediate base that has been reconfirmed is somewhere close to around 270, and the recent price move that we saw and the closing above the 300-310 cluster, reassures that the cluster base is moving forward. So probably one can keep a stop loss somewhere close to around 288 on a closing basis and continue to retain this particular counter. On the higher side, we may see it, scaling towards 340. Probably that will be a level wherein, one can reassess the entire trend momentum. But going with the fact that, it will be challenging its multi-year highs. In case, even if that particular level is breached, then probably the move can be very strong and rapid towards 380. So as of now, I think it is a good idea to retain the stock in your portfolio. Keep trailing your stop losses higher. And with the recent price action, 288 would be an ideal level wherein you can place your stop losses.
All right. Take note of the stop loss mentioned by Sacchitanand, and of course, it's prudent to, in fact, hold on to this stock in your portfolio at the juncture. But let's take up a query on Genus Power. This one is coming in from Meet Jaitley. Now, this stock is in focus given the fact that it has won 2 orders worth 3,000 crore rupees or thereabouts. Genus Power over the last one month has lost a little bit of a steam. But on the charts, where would you say it's headed, given the fact that it's just about 20 to 30 odd rupees from its highs?
So the weekly and the monthly, charts are not really comforting for fresh long additions. On the higher side, we've already seen a kind of a distribution which has taken place from the month of August till now. We have an evidence of a hanging man formation, which is a very rare exhibit. So I think 280 remains a very strong hurdle. On the lower side, we have seen it respecting that 240, 245 mark. So probably we may see, the stock consolidating within this particular price action. But with an RSI on the monthly scale, somewhere close to around 87, 88, it will not be a good idea to chase momentum. On the lower side, in case if we see this stock, slipping below that 240 mark, then probably the stock can be considered on a decline towards 220. So I think 220, 225 would be an ideal zone wherein some buy on decline strategy can be deployed.
All right, buy on dip strategy around the level that Sacchitanand just mentioned. But let's take up the next query. This is coming in from Pooja Mehta. Wants to know your thoughts on BEL. Now, Bharat Electronics, I mean, and some of these defense names, of course, we saw a stupendous run. But of course, over the last month or so, these names have kind of, come under a fair bit of profit booking. But at the current juncture, do you think the breather that we are witnessing in some of these stocks present an opportunity to buy? Or do you think that, this leg of the rally is done for now?
Well, after almost 7 months of a continued up move, the stock is still holding well above its 5-month exponential moving average, which is currently placed at around 130. So I think, the stock is undergoing a time and a price correction consolidation. We may see it, slipping towards 130 kind of a base. So probably, that will be a good level wherein the stock can be reconsidered. But as of now, it is prudent to, stay on the sidelines. The price movement from 145, 147 towards 133, which happened on September 12th, is not really comforting. The pace of the decline was not healthy, and probably we see that this particular base at around 134 may be again challenged, and probably we may see further slippages. So I think 130 is the level wherein the stock can be considered. But as of now, in case someone is holding this particular stock in their portfolio, and then keep a stop loss somewhere close to around 120 on a weekly closing basis. And we still recommend, adding this counter, but on declines towards 130.
All right, that's the view on BEL. Add-on declines around 130 or thereabouts. But let's, take up the next query. This one is coming in on Snowman Logistics from Rupak Mehta. He's entered into this stock last month, and of course, over the last month or so, we know that the stock has been stuck in a downtrend, down 10% or thereabouts. Would you advise him to stick to it at the current juncture, or average it out, or how should he go about it?
Well, I would, recommend to average it out, because if you look at the weekly and the monthly structure, it is showing some signs of a good, healthy consolidation. Even right now, it has managed to, retain itself above that 48 mark. In case if we see slippages, the next level of support comes at around 44, where its 200-day exponential moving average is placed. And even there, I think, it will be a good juncture wherein the stock can be considered from a fresh addition perspective. The stop loss from here on should be placed at around 36 on a weekly closing basis. And he can, average this particular stock right up to 44 levels.
All right. I hope that answers your query, Rupak. But let's take up the next query. This one is coming in from John Beju. Wants to know your thoughts on Piramal Pharma. Sacchitanand, this stock, of course, even this stock has been, stuck in a downtrend over the last month or so. It has lost somewhere around 7% on the charts. But would you say that it could retest or it could go down to levels of 80, or do you think 100 or 110 on the upside is something one should look at in a couple of weeks' time?
Well, very difficult question. In fact, it has formed a double top kind of formation at around 110 levels. And from there, we saw an immediate movement towards 1995. Now, it has been hovering near its 200-day exponential moving average since that double top occurrence. So probably, in case if we see that 95 level getting revisited, it may, conclude into a breakdown. And probably post that, we may see the stock, slipping towards 80. So right now, I think it's better to avoid the counter. One can only consider, participation once the stock starts trending confidently above that 110 mark. But as of now, if you look at the daily ADX, the way, yesterday's price was, did close below its 200-day exponential moving average, there's a good chance that this 95 support could be breached. And we may see some slippages towards, 87, 88 mark.
All right. crucial support zone may be taken out, and 87, 88 is where the stock may be headed. But one last question from my end, Sacchitanand. We have had a HSBC report on financials this morning, and the brokerage has downgraded quite a few financial names like SBI Cards, LIC Housing. Target prices have also been cut by over 100 rupees or thereabouts. So, thoughts on where SBI Card is headed today and LIC Housing?
Well, SBI Cards has been in a clear-cut downtrend. It has been forming that lower top, low bottom sequence since almost 4 months now. And even right now, it looks like a bearish flag formation. The breakdown was exhibited yesterday. We may see this particular move getting, dragged towards 760, and probably one can continue holding on to their shorts. The immediate hurdle on the higher side remains at 800, so probably the stop loss should be placed at around 805 on a closing basis, and the stock can be reviewed near to that particular support level of around 760, 755. When it comes to LIC Housing Finance, it's a completely different trend. The sequence remains very positive. Even in the last 7-8 trading sessions, we have seen the stock displaying a healthy consolidation, and it has been reconfirming that base at around 460. So probably we may see further movement towards 520, 540 kind of a zone on a positional basis, and that's why I think the stock can be accumulated even on declines. The stop loss from here on should be placed somewhere close to around 435 on a closing basis. And even if we see some initial reaction, I think 450 base looks very confident, wherein further long positions are recommended.
All right, those are the levels to watch out for on LIC Housing as well as SBI Card. With that, we've come to the end of the query segment. But Sacchitanand, before I let you go, what would you be recommending for our viewers this morning?
Nandita, I think the focus has been on mid caps, and given the volatility, it is better to keep a long short, combination while trading. Metropolis is something that we have recommended to our clients, and still we see a good potential upside towards 1585. So we are recommending building long positions here with a stop loss at around 1485 on the lower side, and on the higher side we are expecting a move towards 1585. The second counter, which has been exhibiting a very good consolidation in the last few trading sessions, is Jubilant Foods. We are expecting there could be a good momentum traction in a day or so, and that's why we are recommending building long positions here with a target of around 550 in mind. The stop loss for the trade should be placed at around 522. And a sell call on Bandhan Bank. If you look at most of the mid-cap PSU names and mid-cap banks, they are showing some signs of exhaustion here. Bandhan Bank has clearly distorted one of its higher top, higher bottom sequence on its 60-minute scale. And that's why we are seeing that there could be a further leg on the lower side, which can push the counter towards 240. So recommending short positions here with a stop loss at around 252.
All right, those were some of the recommendations coming in from Sacchitanand for the next couple of weeks and perhaps today. But with that, Sacchitanand, thanks a lot for taking out time and joining in this morning, and of course addressing all of your queries with so much patience. Thanks a lot.
Yeah.
Well, with that, we've come to the end of this edition of Morning Trade. From me and the entire team, thanks a lot for tuning in. But don't go anywhere, because coming up next is Opening Bell.